It is golden times for gold investors, especially gold mining stocks are ripping this week. Monster moves in the gold miners. Good that we're invested in them, but let's look at gold. Let's look at the gold miners. What's going to happen next? How do we play this market? This is the strongest market in 2025. This is where we need to be, and we need to know how to play it. We'll talk about it now. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. All right, let's jump right into it. We got good news for the gold bulls, which we are here on this channel. As you can see here, gold chart on the daily. Many good news with the developments of this week. First one, downtrend since April. Broken on Monday, confirmed, check. Higher high, check. Higher low, check. All bullish signals. We are, as you can see here, at the tip top of the last resistance zone, the blue zone. We close above it and we confirm the close above it. The next up move is starting in gold. There's another formation that not many people, as a matter of fact, I don't know anybody yet that's talking about it, and that is that we have an inverse head and shoulders pattern completed on the daily chart. Now, head and shoulders formations usually are most strong and most significant at the end of trends. So head and shoulders at the end of an uptrend or inverse head and shoulders at the end of a downtrend. However, they have significance if they are within the direction of the overall trend. So in this case, we have an inverse head and shoulders as part of a correction phase within a dominating uptrend. That is significant. And not only has it been completed with the big jump in the gold price on Monday, this also gives us a chance to calculate out what's the potential of the coming gold rally if we close above the blue resistance zone. And here we go. So the upside potential calculated by the head and shoulders is about 8.7, 8.8. Okay, now let's calculate this out. And this will tell us where we will go and what potential we have for this coming gold rally. And this will take us all the way to, here we go, let's see, there we are, around $3,700. And that does make a lot of sense because most targets that we hear right now for gold are 3,500 to 3,600. We're in a bull market now for gold. That means we're going to overshoot all the time. So 3,700, that's the price target we are going for with the coming next phase of the bull market, the next coming rally. Now, support for this rally could be coming from the dollar. This is the dollar chart. You know it well. I started talking about the dollar going down in January. And if you missed this call, then I highly suggest that you subscribe to the channel if you're not subscribed so you do not miss calls like this. You are informed what is happening in the markets. As you can see, it looks bad for the dollar. All right, it looks bad for the dollar. We're getting bad signals. First one, we got the lowest close on Monday since this breakdown in April. Now we jumped right back up. Makes sense, right? Support for the dollar, but today we're weak again. We'll see where we go, but this looks like weakness. The next thing I'm seeing, which I do not like, is look at this. We have a new midterm downtrend, and this one is steeper than the long-term downtrend. This is significant. This tells us the dollar decline is picking up steam. This is not what you want to see if you are a dollar bull. It's definitely what you want to see if you're a gold bull, because a weak dollar is good for the gold price. You want to know, well, where the tailwinds are going to support the rally in gold. A weaker dollar would be one of these support factors. Now let's talk and get into the mines. We'll start with GDX, the ETF for the senior producers. And we see this looks great, but so first, what looks great? Let me get to the monthly actually, so you know what we're talking about. The monster base that has been developing for freaking 13 years, it's finished to the upside. So that means we are in a new bull market overall for the gold miners. We broke above it, we retested it, we broke the downtrend, we're off to the races, and we just got a new close this week. Buying signals galore. Gotta love it, right? This is for the seniors. What we also like is the RSI, yeah, it's high, but it's not in the massively overbought category. It's not like it was in April when we got this steep correction. It's not like it was in February when we got this correction, or especially in October when we got the big winter sell-off. We're not there yet, as you can see. So that gives us some room. What I do not like is we are seeing a negative divergence right here, as you can see. So the RSI is making a lower high while the GDX is moving up. Now, this doesn't mean that it's going to correct tomorrow, but this is a sign that we need to be cautious here. The mining stocks, they're going up, but the dynamic is fading already, right? The buying dynamic is fading. So let's look at the juniors. What's happening right now is that the senior miners are basically full right now, meaning they have had their move and a lot of them are not cheap anymore as they were in 2024 or at the beginning of the year. If you look back, if you remember at the beginning of the year, when I talked about gold price is going to break out, we need to get into the gold miners, the gold mining stocks were not moving. Gold was moving, remember, but the mining stocks were not moving. And if you don't remember the videos, maybe it's because you weren't subscribed. You definitely should subscribe them so you do not miss these calls on the market. Because we are here at Hot Trades of the Day, we talk about the trades that not everybody's talking about in the market. So now the miners are moving, and they're moving stronger than gold. In the April-May correction, the mining stocks held up really well compared to the gold price. So what happened now is basically that discrepancy between gold moving at the beginning of the year, miners not moving, that has been reversed now, and that gap has been closed. The senior producers are now fully valued. Some of them are even expensive. So what we're seeing right now in the market is that the investors are moving more and more out on the risk curve to find value. So it used to be the senior producers and the junior producers. Now they had their run. Now what we saw this week is the okay and average junior producers and the developers and the explorers are moving. The only thing that's not moving yet are the junior explorers, because they're so small, only retail is investing there, and retail is still at the moment still partying with the explorers and the developers. When you see this move out on the risk curve in the mining stocks, you know that we're reaching the end of one cycle, right? This is how this goes. This is not the end of the mining bull run. As you can see, if you look at GDXJ, it's quite the opposite, right? We are just starting. Look at this. We finally broke out above this 12-year base. We finally broke out above it, and look at the upside that we have. If we're talking about reaching the all-time highs from 2010, from the last gold mining bull run, we're talking, this is almost a $200% upside that we're having. But as you can also see, we've had basically a monster rally for a year and a half now, a really strong rally. This is the monthly, right? And as you can see, let me zoom out. We haven't had one red candle since the beginning of the year. And as you can see on the monthly, we're getting into the overbought territory here, right? Last time we were at these levels was here, big correction followed. Now, I don't think this is going to happen this time. The gold price is higher. The gold bull market has started. We didn't have that back then, right? Remember 2020, this is when the tech stocks started to rip, the COVID paranoia went out of the market, gold was falling out of favor because tech was hot, stock market was hot. This time, little different. Gold is hot. Gold market is hot. But I just want to show you, even 2011, the RSI is lower than it was today. So what does that mean? That means right now, and again, I would like to point out, as I did with GDX, right? We have a negative divergence in the RSI. There we go. Let me finish. Here we go. So, as you can see, right, we're making higher highs in the GDXJ, but the RSI is not confirming that anymore. This is a warning signal. So, the trend short term in the mining stocks will probably continue for a little bit, but we are reaching the end of this 2025 up move. A correction will be coming, and it's a healthy correction in the mining stocks, and it'll be a big buying opportunity. Now, will it start now, and then we see the gold move to 3,700? Will we have the gold move to 3,700 first, and then the big correction? We'll see about that. But I would be very, very careful to jump into the mining stocks now. Some of them are going up like 15, 20% a day. This is clearly bubble behavior, right? These are the same type of investors that were buying Rigetti and the quantum robot space stocks in the winter. And now they're looking for, oh, what's the next thing that we can do? Crypto is not really moving. Oh, gold mining stocks are ripping. Let's go. Let's buy anything. Anything that's just breaking out. Don't even look at the fundamentals, whatever. So this will, again, the same way it did with the quantum robot space stocks, bite these people in the butt. We need to be patient. We need to be disciplined swing traders. We need to do our homework, and then we'll wait for the correction. That will come, right? The one thing about the mining stocks, they'll go higher than the gold price, right? And that is great, but they'll also be more volatile, and they do correlate with the stock market. Mining stocks, especially on the levels below the senior producers, are risk assets. If you go into the explorer part, they're highly risk assets. Be very, very careful if you want to buy explorers, or especially junior explorers. I can guarantee you that right at this moment when you watch this video, bankers, lawyers, and managers of exploring companies are having conference calls right now about raising money. This is a godsend to them. And we will see a bunch of capital raises coming out, diluting shareholders. These explorers need money. Now they have a run in some of the prices. The junior explorers not so much, but a lot of the more advanced explorers. This is their chance to raise money for the new drill programs and whatnot. This is coming, right? And if you blindly buy a stock and you get hit by a capital raise, the stocks will go down 10% in an instant. And then if the segment cools off just a little bit for the miners, you can be down 15, 20%, and that's absolutely not necessary. We kept our cool, and we're calling for the bull run in the mining stocks when nobody else was talking about it and interested. And now, when they're overheating and partying too much, we know that that hangover is coming. So let's take a step back. Maybe we'll miss the last top end of the rally. I wouldn't sell any quality gold stocks right now. I'm not selling any gold stocks right now, as a matter of fact. But I also do not own any stocks that I'm not convinced about fundamentally. That doesn't mean that it'll all work out, but I'm I have a high conviction on management and the projects, so I'm not selling them. But if you are into some trading stocks that you just bought because they broke out of a base formation or whatever, you don't know what they do, or you're not even that convinced that they're good projects or good managements, you might want to take some profits here. This does not mean that the bull market is over. No, but remember, bull markets goes in rally phases, and then we need to breathe and let it out and let out the air and cool down for the next wave up. And this is what is on the horizon for the gold mining stocks. Real quick, watch out for silver. I told you before silver that I heard that several hedge funds are positioning themselves for a catch-up trade of silver. If silver goes over 35.50, the blue horizontal zone that you see here, that we tried to break out in March last time, got rejected. If we break above it and close, we'll see a major short squeeze in silver. So keep that in mind. Weakness in silver, I would open up long positions in silver. That's it for today. Talk to you later. Bye-bye.